Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, with a new week starting, the Australian dollar did enjoy a relatively bullish week. However, from Friday's challenge to the upside, the market bullish tune was slightly overturned, and from the rejection from the 72 area, has questioned now whether the market has actually fallen back into a bearish sentiment. The level seen at 71.30 is the key to the downside, and if it breaks beneath that level, would seal the fate towards 69.40.80 as the objective. Any advances to this week should see resistance still around that 72.25.30 supply zone, with the immediate resistance today at 71.85. With the Australian dollar remaining as a hostage by the situation between the US and China trade wars, the market will be looking towards today to see whether or not President Trump does impose the tariffs as he suggested over the weekend. It was reported that the US would impose the next round of tariffs, but not as much as they indicated, but down to around 10%. Therefore, this would put a little bit of strain onto any bullish rally. So therefore, as I said, beneath 71.30 would seal the fate to the downside. The euro clearly rejects that level of 117, and from the rejection does give further indication to a further challenge to the downside, with the immediate support seen at 115.85.95. A break beneath there would give further scope, and down towards the recent rejection area of 115.20.30, which I expect profit taking may start emerging. But from a technical point, the RSI is nearly married up with the MACD, so therefore I do expect to see further weakness, with the immediate resistance today it's seen at 116.80 and firmer above, as I mentioned before, around 117.55.65. My view in dollar yen is still at this stage not overly confident in the current rally. Still, nevertheless, the market is a little bit more to the bullish case as it gains momentum above 112 handle. The upside projection can come into around 112.50.60, but I do expect to see the market slowly unwinding out of its long positions, and therefore profit taking should start emerging towards this level. The support on the day seen at 111.45.255. Well, the pound found a little bit of a cap on Friday after posting a high at 131.42. It is assessed that the resistance at 131.60.80 may serve as a near-term resistance in the coming week. What sent the market lower was the fact that breaking news out of the UK that the Labour Party is set to vote against the Prime Minister Theresa May's Chequers Brexit deal. This could indicate that if the Conservatives don't support May's plan, then the Prime Minister could be overthrown before the year end. It is viewed that the market has, from many attempts now, seen this as an occurring story, and Theresa May actually lose her footing and therefore could see a challenge to her position. For the day, though, I do expect to see support at 130.45, trigger a move down to the region of 129.5, and as you can see from that area, is a bit of a key point. But we do need to see this level broken to get the next play towards 126. But for the moment, the range is 130.45 to 131.60.80. Although I don't have a strong view on gold, the market did take a plummet from the resistance of 1,212. From the rejection, does see further increase to the downside, but technically we haven't fully broken down from the MACD. Until we get that, then we could still see this range of trading sideways between 1,190 to 1,212. And as I mentioned, I don't have a strong view until we get to the lower range around 1,160.70. Wrapping up with oil, we've got a long-legged doji. A little bit of caution because this is a little bit indecisiveness in the sell-off that we're recently seeing after the rejection, after 3 attempts at 71 over the last few months, did clearly fail. I believe the market will take a challenge lower. I see a challenge of $67 a barrel and see if we can break that level to expose the region down to 61.62. The other thing to note is on Friday, the oil service firm Baker Hughes said that the oil rigs output rose by 7 to 867 last week. That did give a bit of a sell-off to the oil. And as I mentioned, I am still a bear. With these technicals coming back into play, will pressure $67 a barrel. As I said, a break would see a further slide. That wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.